The Bank of India, the net NPA stands at 7.79%. Provisions have risen quite a bit sequentially as well. For Bank of India, we were expecting a loss this time around. It was supposed to be a hat trick. I mean, not a very, was it an infamous hat trick is what we were expecting.
It's that 4 percentage point rise in gross NPA. Actually, one shouldn't be terribly shocked because even last quarter, when they announced that 9% NPL, it was expected that the company would say that this is the entire AQR. The company did not say it. So it was very clear that they're going to spread their problem assets over 2 quarters. So this is a 400 basis point higher NPL. That's a huge rise. People were preparing for a lot of bad news from Bank of India, especially because the kind of assets they own have already been declared NPL by several companies. Actually,
the provisioning...
I thought you're getting the net NPA number itself. We have to look at the gross NPA number.
The actual gross NPA number stands at 49,879 crore rupees at the end of this quarter, which itself is a substantial increase. Q3, they were at 36,519, so 36,500 odd. That number has risen very, very substantially to nearly 50,000 crore rupees. And rounding it off, 49,879 would be more specific. So big, large, chunky increase in the actual gross NPA number as well. Provisions are also high. Provisions have climbed to 5,470 crore rupees as opposed to 3,600 odd Q on Q. So provisioning is high and NPA is high.
25-30% rise in NPAs. So it was already a very big NPA number, and rising by about 40% is not a very pretty picture. What one would like to know from the company is whether now the cleanup is more or less behind them. We also would want to know whether, they're looking at any watch list, whether things... actually, you should pull up the 1 year of that chart and you would have seen that the stock anyway was not performing for a very, very long time. It was a problem bank for the past 3-4 years, and it's just paying for past sins as well. But this is a very serious net NPA number, not looking good at all for Bank of India. Loss making, as well as a lot of hard work still to be done. Actually, I would like to know what is the provision coverage ratio, if we can get it. Provisions are high, but the big worry for me is whether even these high provisions are enough. We may have to do a lot more work before the company provides for about 70%, which is what the Reserve Bank would like it to provide. You'll have to go down into the press release at the notes to accounts where you will get the provision coverage ratio.
I'll just search for the PCR as well, just to talk about the breakup of the businesses. Wholesale banking on a year-on-year basis has seen a bit of a compression. Those revenue numbers now stand at just under 5,000 crore rupees. They were at about 5,300 earlier. Retail banking was also fairly flat. But I mean, if you give me another 1 odd minute, I'll quickly dig out the
provision
PCR.
coverage ratio would be the one that's really important, because the Reserve Bank's ideal number is 70%, but no bank is anywhere near it, or rather many banks are not anywhere near it, and therefore it will take a while. It will take a lot more of provisioning to write, and mine simply says file not found. So I'm not able to get to the number. But in any case, it's very clear that there will be a lot of hard work that Bank of India will have to do before it is able to clean up its balance sheet well and proper. All right, we'll do one thing. We can come back. Okay, we have Siddharth Purohit, an analyst for Bank of India, who joins us. Siddharth, what are the initial numbers telling you about 37% rise in gross NPLs to nearly 50,000 crores? Do you think the worst is out, or you will have to prepare for more?
See, Bank of India has always, seen stress for last 2-3 quarters, has been even worse than what initially was thought to be. And this quarter has again been, quite high in terms of absolute increase in gross NPA. If you just see, the provisioning numbers for almost all the PSU banks were high for this quarter, and same trend is for Bank of India also. But then also on a quarter-on-quarter basis, from 3,600 crore almost provision to 5,400 crores odd looks on a higher side. But I think that has been a
Trend.
kind of trend for the entire PSU to shore up their provision coverage ratio, which was on a lower side. So it's not very surprising to report a loss for this quarter. But what matters is that whether after this slippages and substantial rise in NPA, now from last quarter 9.18% gross NPA, now we are almost 13% plus. So whether this is the end or not, that I think the management should give a guidance in terms of SMA2 numbers and outstanding.
Actually, the important point is the
PCR
gross
is at-
NPLs has risen also because the balance sheet has shrunk. Advances have fallen from 4 lakh crore to 3.5 lakh crore. That's a huge fall in advances. It's a fall of almost 40,000 crore in advances. So it is because the numerator has gone down that the amount of bad loans also seems like a higher percentage. I'm not saying 37% higher is a small number, but my sense is that since the balance sheet has been crunched in this fashion, that 13% looks very bad. But my sense is that a large part of the cleaning looks like done. Okay, during the quarter, the bank had changed its accounting policy of provisioning in respect of NPAs as doubtful from 60% accelerated provision to 40% minimum provisioning. Okay, had the earlier policy been formed, the provision would have been higher by 2,800 crore. So they used to provide more. Now they have reduced it to 40%, but they have not still given the overall PCR number.
That number is there, Lata. PCR stands at 51.14 at the end of this quarter versus 52.4. So there is a deterioration, I guess, in the PCR
All right,
coverage
but
as
that's
well.
a little mild, not huge. It's very obvious that another 20% will have to be provided for. So provisioning problem, even if the bank doesn't generate NPLs in this accelerated fashion, in this seminal fashion, the very fact that they have to provide for the balance 20%,
They're nowhere
only
close to the
50%.
mandated 70%.
Yeah, mandated, I think this is advised.
Okay.
And this is an advice which came from Mr. Mundra yesterday. So it's something that the Reserve Bank is now, by moral suasion, trying to push the bank. It's not as if a rule existed, but the Deputy Governor of the Reserve Bank in charge of banking supervision mentioned that number in the public domain yesterday, that they would urge banks to not stop the cleanup now, but to continue with it and proceed towards a 70% provisioning. And therefore, we should expect that for the next few quarters as well. Provisioning will be high, but one hopes generation of fresh slippages will not be as high as this. Bajrang Bafna, the head of research, head of equity and strategy at Sunidhi, is also joined in. Bajrang, what's your first thought? Is the bad news out? Is Bank of India looking like it is buyable at 80 rupees?
As Lata pointed out by you also, and we are expecting for most of the public sector banks, the accelerated slippages are clearly visible as, indicated by us through our Z score analysis. And I think mostly this 20% kind of range of, stressed assets which are sitting on the balance sheets of banks. And I hope with this GNPA and the restructuring number, that number is already, now visible to us, considering also the SDR and 525, though we don't have those numbers, but the trend is very similar across most PSU banks. So I think major part of the cleaning is over, and that's definitely a good news, but it requires, to be provided in the P&L also, which will take at least, 2 years time, to get into the P&L and eventually depressed ROEs. So that is what the bigger concern. So the stock price shouldn't react very much positively on that. Of course, we have seen in PNB case also the stock price has not fallen despite the bad numbers, and the similar should be the trend for other banks because they are already factoring, this kind of slippages.
Fair point. I just wanted to add that the bank has said that about 165 crores has been provisioning because of the loans to the Punjab government for food credit, and another 140 odd crores is because of provisioning for Discom loans to, I think, Haryana. So as you can see, it's partly government policy also that is forcing them to provide for more. 109 crore were in respect of loans converted into state government loans, and another 24 crores of loans which were converted into Discom bonds for the Haryana state government. These are of course part of the Uday scheme, and then of course separately another 165 crore because of loans given to the Punjab government. See, when your bad loan is 49,000 crores, a small 500 crores has been because of errant government actions or government policy actions, not errant. But that's the story. Okay, we are getting now some good numbers. Okay, Bajrang, thank you very much for joining us.